Let's dive into the latest stats and trends for the Portland metro real estate market. This week we'll break down the preliminary May sale prices, plus we'll look at days on market, mortgage rates, as well as the current supply and demand dynamics. The average sale price was down from last week's pretty strong showing, but we still ended up about 2.1% higher than where we were last year at this time. That's a little bit lower than what we've been seeing in our year-over-year numbers as we move through the month of May. I did a preliminary comparison of May 2023 to 2024. That's for my metro-wide sample, and we landed about 3.9% above last year's average sale price. That's not a solid number yet because agents sometimes take a day or two to report their sales to the Regional Multiple Listing Service, or RMLS, so I won't have solid numbers until next month. Buyer demand surged this past week, which is a little bit surprising given that it was a holiday week. The number of purchase agreements agreed to by buyers and sellers was up about 10% over the previous week and up about 11% compared to last year at this time. This year's market has been outpacing last year's market, on this metric at least, for about 4 weeks straight now. The number of lockbox opens, which is another measure of demand and kind of our measure of high intent buyers out with their agents looking at homes, that number was down compared to the previous week, but that's typical for a holiday week. However, for the first time in a few months now, this year outpaced the lockbox opens we were seeing last year at this time. Not by much, by less than 0.5%, but like I said, this is the first time that we've seen that in several months. We've been seeing the supply of homes to purchase growing consistently since about the start of the spring buying season, but that number stalled out this last week. Probably the result of a low number of homes coming to the market combined with a strong buyer demand. The next couple of weeks will tell us if that's a new trend. However, I suspect it's just a blip. I would expect to see the total number of homes to purchase to increase pretty regularly, week after week, at least through the end of summer. On average, homes are spending about 36 days on market. Last year at this time, the average days on market was 29. But here's an interesting chart that shows the median days on market. What this shows us is that 50% of the homes spent 11 days or less on the market before receiving a good offer, and the other 50% spent 11 days or more. So the experience for more than half the home sellers was a lot better than the 36-day average that we've got right now. You can see that the number has been rising over the last couple of weeks. That's something to watch because last year the days on market for both the average and the median didn't start to regularly increase until July. Mortgage rates were relatively flat this last week. The best case scenario I could find for the 30-year fixed came in at about 6.625%. Most lenders were somewhere around 7% or more. We did get some inflation numbers this last week, and they came in right about where the markets were expecting. That caused the yield on the 10-year Treasury, one of our best indicators of where interest rates are headed. That caused the yield to start inching down, and mortgage rates may follow suit at the start of next week. And there you have it, the end of our weekly market report. Thanks for tuning in. I truly appreciate your time. Don't forget to subscribe and follow this channel to stay updated. If you found this information useful, please give me a thumbs up. Have a fantastic weekend, and I will see you right here next week with some more insights.